Hi, I'm Barbara Carr, Senior Mortgage Officer with Hometown Bank of the Hudson Valley, and also very proud to serve on the Board of Directors here at RDAC. I'm going to talk to you today about credit scores. So what is a credit score? Basically, it's a 3-digit number, and it's a snapshot of your credit history at any particular time. Why is it so important? Well, we all know that lenders pull a credit report when you want to get a loan. So they look at it, and it's the single most important factor in determining whether or not you're going to get that loan. And if you do get the loan, it also determines what your interest rate might be. The highest credit scores are always going to get the best interest rates. But who else looks at your credit score? Well, if you're looking to rent a house or an apartment, your landlord's going to take a look at your credit score. They want to rent to responsible people, and your credit score tells them if you're a responsible person or not. Basically, if you have paid all of your debts on time, you're a responsible person and they want to rent their house or apartment to you. The responsibility factor is also used by insurance companies. When you have car insurance, the insurance company is going to take a look at your credit score. Along with your driving record, that credit score is going to determine what your insurance premiums are going to be. And most importantly, if you're looking for a job, as a lot of people are today, potential employers are going to look at your credit score. Some companies have policies where they'll only hire someone with a minimum credit score. Others are just going to use it to, again, determine your responsibility and your character. If you are applying for a job along with someone else applying for the same job, you both have similar backgrounds, similar work experience, and similar education. One person has an 800 credit score and one person has a 600 credit score. Probably the one with the 800 score is going to get that job. So what factors go into determining your score? The biggest factor is your payment history. Have you paid your past and your current debts on time? A single late payment may not have a huge impact on your credit score. Likewise, making all payments on time is not going to give you a perfect score. The more recent a late payment is, the more impact it's going to have. A 30-day late payment is not as significant as a 60-day late payment. Likewise, a 60-day payment isn't as significant as a 90-day late payment. Recency and frequency really are going to determine what's going to hinder your credit score. A 60-day late payment made 2 months ago is going to have a big impact, while a 90-day late payment made 5 years ago is not going to have a big impact. Collection accounts and public records like bankruptcies, foreclosures, liens, and judgments, they're considered quite serious and they're going to have a major impact on your credit score. Older items and small items, not so much, but any recent derogatory information like a bankruptcy, collection, or judgment is going to have a big effect on that score. The next factor that affects your score is how much you owe. When a person's available credit is used up, this can indicate they're overextended. Keep in mind that even if you pay off your credit cards every single month, your credit report is still going to show a balance. The total balance on your last statement that you receive in the mail is probably what's going to show up on your credit report. Showing a small balance and missing no payments shows you've managed your credit properly. That might be slightly better than carrying no balance at all. On the other hand, closing out unused credit cards that show zero balances will not raise your credit score. If all of your accounts have balances, that could indicate that you're overextended. How much of an installment loan account is still owed compared to the original amount counts too. For example, if you borrowed $10,000 to buy a car, and you've paid back $2,000, you now owe 80% of the original balance. Paying down installment loans indicates you're able and willing to manage your credit. The next factor is the length of your credit history. In general, a long credit history will increase your credit score. Your credit score considers the age of your oldest account, the age of your newest account, and the average age of all your accounts. The next factor that they look at is new credit. How many new accounts do you have? Multiple new accounts indicates greater risk. How many recent credit inquiries have been pulled? Keep in mind that scores can distinguish between a search for multiple new accounts and rate shopping for the best mortgage or loan. The final factor that determines your score is the types of credit you have. Is it a healthy mix? The score will consider your mix of credit cards, installment loans, retail accounts, finance company accounts, and mortgage loans. It's not necessary to have one of each. The credit mix will not be a key factor in determining your score, but becomes more important if you have a short credit history or not enough other information on which to base a score. So how can you improve your score? First of all, pay all your bills on time. That's the most effective way to improve your score. Keep your proportion of your credit used to less than 50% of your available balance. Pay down debt. That's the next best way to improve your score. And keep unused accounts open to improve the length of your credit history and minimize the proportion of your balance to the available balance. Finally, don't open new credit accounts. You're entitled to receive a free copy of your credit report once each year. You can get your free credit report from www.annualcreditreport.com. It does not give you your score for free, but it's important to know what's in your report and to check it every year for accuracy. I always recommend that people pull their credit report when they're doing their income taxes. It's kind of taking care of your financial business. Derogatory information contained in your credit report that's inaccurate will affect your score. For information on how to dispute inaccurate information, please visit www.myfico.com. Thank you for viewing this presentation. I hope you found it helpful and it helps you to understand your credit score.